Folks, this is Marco Palmero, and in this video, I want to share a little bit about my story. A lot of folks and clients have been asking me how I started sourcing deals, how our company kind of got started, and how we initiated a process of sourcing deals for people. And I want to share that. Of course, not all of the stories, otherwise, we would be here for a lot of hours, but at least how everything started to fall in place for me. And what will be interesting for you to understand is that we didn't really start sourcing deals in the US, which from my perspective is the most competitive, but also the easiest market in terms of finding deals, finding opportunities, and connecting with motivated sellers that are interested in an exit. We started actually in a very complex market, that is the Middle East, more specifically the United Arab Emirates and the UAE. About 4 or 5 years ago, I was there on some other projects, and as I was conducting these projects, I basically stumbled on an opportunity to help a multinational hospital group in entering that particular market. The company at the time was looking for a way to enter the Middle East market because they had a strong presence in another kind of like region of the world. And so they wanted to tap in an opportunity in the Middle East and buy an asset. So at the time, I was already in business acquisition for other things that I'm not going to discuss in this video. They might be subject to another conversation. And so I got presented this opportunity to help this multinational hospital group in finding business deals. This group was huge. It's like generating more than $250 million a year in revenue. So it wasn't like, a tiny task that you can actually get done on your own. But at the time, I was basically operating by myself with a few partners and a few people that were helping me. If you want to call them employees, you can call them that. I generally don't define them as such. But the team was very small. And basically what was happening is that this group was interested in entering the market. They didn't know the market very well, and they were interested in buying an asset instead of starting something from scratch. Well, I already knew at the time that acquisition was the best way to enter a market, to grow a company, and so on and so forth. But the fact that such a big group was interested in that proposition reinforced my belief that acquisitions are by far the best way to grow a company or even start a business to some extent, because they're basically skipping all the painful startup process, and you're basically buying the risk revenue if you buy it correctly. And so it was very interesting for me to see that despite the fact this group had the financial capabilities and the strength to sustain, a new hospital operation within the region, they still wanted to acquire one because it was for them the most convenient option, the cheaper option, and to some respect also the option that made more sense from a strategic perspective, because they didn't have a lot of knowledge in the region. Therefore, they felt that finding something that was already established was a better solution, which of course is something that is very, very reasonable for them to think about. So long story short, we didn't start in the US. That's something that happened later as we expanded our operations and we saw that our strategies were working well, globally in terms of finding deals. So at the time I got that opportunity to help this group find hospital targets or medical businesses for sale, not only in the United Arab Emirates and in Dubai, but across the Middle East, primarily Oman, UAE, and Saudi Arabia, were kind of like the three core economies at the time. Now, you might be wondering, why is it that they asked me about it? Well, that was a mutual connection of ours that kind of led me to that relationship. So I can consider myself blessed in that regard, because without that connection, I wouldn't be able to, and I wouldn't be able to have the business that I have today. So that was kind of like a very good relationship that we developed from the get-go. And kind of like that credibility piece of having a shared relationship enabled us to get a foot in the door, and then position us as somebody who can support this group in finding deals. Now, let's just set aside for a second that at the time, we knew a lot about deals, transactions, and stuff, but we didn't really have a consolidated process like we have now for predictably sourcing opportunities through a variety of different channels, sourcing transactions. So we were, I would say, a good combination of scattered efforts, if we want to say so. And the interesting thing was that we were confronted with a challenge when it comes to finding deals that was the economy we were operating with. I think very few people watching this video realize how lucky they are because they operate in an economy, in a market that has huge data accessibility, a huge proclivity towards business acquisitions and deals, in a very business-friendly environment in terms of transacting, acquiring assets, and being open to discussing deals in general. So if you're in the US, if you're in the UK, if you're in Europe, that is most likely going to be the case. Maybe a little bit less in Europe. That's probably wrong for me to include it. But at least if you're in the US, Canada, UK, certainly you have access to a lot of data, you have access to a lot of deals, and provided you have the right system in place, you can find quite a lot of transactions in a reasonable period of time. That wasn't the case in United Arab Emirates or in the Middle East in general. The first problem that we were confronted with was the fact that data was not readily accessible, simply because there was no centralized system, database, or place where you could find cheaply and easily information about specific businesses that was categorized by size, revenue, and so forth. So a lot of it came down to manual labor in the beginning, until we realized there were a few ways to kind of like streamline the process, and I'm going to be talking about that in a second. But what were the challenges? First, data accessibility, very, very difficult to find good data in the Middle East. Second, despite the best efforts of people to position the UAE and the Middle East as a business-friendly environment, which it is, by the way, it's very, very open and very easy for you to do business in there. There's still a little bit of resistance towards business acquisitions, especially if the acquisition itself is for assets that are sub $50 million in size, which was, what we were looking for. Above that, we enter into the realm of private equity acquisitions and hedge funds, and that is a different ballgame. It's much more common for big groups to buy assets and create portfolios because, of course, the wealth of the Middle East is second to nobody. So in that sense, there's a lot of, the market is very sophisticated. But if we're looking at assets, I would say, let's just not say sub 50, let's say sub 25 mil. It is very primitive. It is very rudimental. And people still trade businesses almost like they're products on a marketplace. So it's like, make me an offer, pay me in cash, and it's how things are going to go. Look at the business, make me an offer. I'm not going to share financials. You looked at the business, you know how much it should be worth. Let's negotiate from there. So all these were challenges that we faced early on. First, difficult to find good data and find good sellers quickly. Second, very difficult to initiate a discussion and get clarity on information and data and kind of like on the process itself. A lot of people were less familiar with the acquisition process. And, sometimes I laugh when I work with clients that say, well, in my market, sellers need a lot of education, and they're operating in the States, by the way. Yeah, that might be true, but you don't know how lucky you are, again, because in other markets, people are far away from anything you could imagine. And I actually faced that situation, so I can attest to that. I mean, you were literally sitting down with people that, yeah, I would sell if you make me an offer, look at the business, and then tell me how much you would pay. I will take cash payment. And then you say, well, we might need to look at the financials and review, the performance of the business, and that is how we're going to evaluate things. And they were saying to you, well, why is that? You saw the business. You can make me an offer. You don't need to see the financials. So you see, there were a lot of complexities and challenges that we were facing early on. But I think that is the moment when, with my team, I started realizing that there was an untapped opportunity, because even though it was true that the market was it was at its infancy to some respect when it comes to business acquisition, it was also true that there was no competition. So provided we had enough time to test and experiment, we could make all the mistakes that were needed and find a way to get through and source deals in the right way. And that's exactly what I did and what we did. So we basically went down and built a model to predictably find motivated sellers. And initially, a lot of that was manual labor, right? Purely sourcing businesses, calling them, visiting the facility in person, because that's another element in the Middle East. If you don't go see somebody in person, you ain't going a deal. So, a phone call is not going to cut it for those of you folks in the States that negotiate everything on the phone. So, as you can see, there was a lot of complexity. And initially, with the manual labor and input that I put in and my team put in, we were able to understand that there were, first of all, differences in the way you were approaching different sellers. In that case, we were talking about healthcare, but we then noticed that across markets. To some respect, you needed to talk with different people in a different way. There was no unique message that would work for everybody. And you had to create a message that was compelling enough for a specific portion of the industry you were addressing to make people respond and then nurture that relationship. It wasn't like something that you could go ahead and do just to kind of like get a transaction done quickly. It was not like how can I define this? It wasn't like hit and run kind of methodology that you could deploy, because a lot of the business deals that were closed and are still closed in the Middle East are all relationship based, which means it takes a long time to get to a point where you can actually talk about closing a transaction. So that initial process of going through the manual labor, finding out all these challenges in the way, in different ways to address different audiences, helped me understand how we could, how we needed to segment prospects lists, and how we needed to build sophisticated systems to achieve the desired outcomes. And so, back in the day, I used to be pissed off by that, because I said, okay, I need to accomplish that results. I need to find these deals for this hospital group, and I'm running out of time. But I didn't look back at things in hindsight and realized that was a good thing for me and something that happened to me for a reason, because it made me think about the process from a high level perspective. And it helped me understand that the cyclicality of a business sale might be longer than we would like, and we need to accommodate for that. And so thanks to that environment that was, lacking data, lacking sophistication in terms of business acquisitions, and also it was very time consuming and draining in terms of effort in order to get to a transaction. All these things and all these elements of the environment enabled me and the team to come up with a solution that could actually find deals short, medium, and long term. So the objective for us was, okay, we understand that we need to accommodate for a certain period of time for these leads to mature. But what happens if, when these leads mature and these motivated sellers mature, what happens if some of them don't close, right? Because that can happen. Then we need to go through the entire process all over again. And if that process took us 6 months, it might mean that we need 6 more months in order to get new qualified prospects through the door. We cannot really accommodate for that. So how are we going to solve that issue? And the answer was quite evident. We need to build a system that progressively nurtures people depending on where they're at in the selling cycle and keeps them in the loop so that when they are ready, they connect with us instead of somebody else. So we can have opportunities that are coming to us every single month that have matured through our funnel, sort of like a lead pipeline, if we want to look at it from a pure business perspective. Although M&A and acquisitions are not really the same thing from my experience. There are a lot of commonalities, but some elements that need to be considered separately. So all these things in kind of like the sourcing process helped me understand that I needed to build an ecosystem for finding deals. And I needed to be as differentiated as possible so that I could touch people where they were more likely to respond and then nurture their relationship over a long period of time to ultimately get the result I wanted. And initially, I made a ton of mistakes. I mean, I burned a lot of transactions. I can still remember it was a discussion with it was actually a dental group. It was a bit outside of the scope of the hospital operator, but it was still an interesting target for them. And I remember completely murdering the the relationship and the deal because kind of like overstepped the issue, kind of like pushed for things to happen too quickly, and that ended up collapsing on me and making like the business owner resentful about things. Now, in hindsight, I think in that particular case, the motivation wasn't quite there, but there was also a lot of things that I could have done better because we kind of like pushed their team and their decision maker to a decision without having qualified them well enough, and the process was very scattered and disorganized for us. So we didn't really had everything we needed in place in order to deliver a good job and maximize the chances of that deal to actually go through. And so that sourcing process for that particular business didn't go super well. But after that and a few other lessons that I'm not going to discuss in this video, we came up with a system that was pretty structured in terms of finding, qualifying, and selecting deals. Because keep in mind that everything that we were doing was surrounding the origination of the deal. So finding good deals, making sure they were the right target, then qualifying for fit, and then connecting the lead to our client. That is all we were doing. We were operating in between as their partner, as their M&A partner. And the most important thing for us was to drive results in terms of qualified connections with targets that were actually suitable for their needs and to their needs. And so through this trial and error process, again, built a process that was organized, structured for originating deals across multiple channels, nurturing the leads across multiple channels and with multiple steps, and ultimately build up a separation between us and other people interested in buying these assets so that these folks were only interested in talking to us. And, back in the day, I wasn't thinking about it as something that could have some longevity because I was like, yeah, it was an opportunity for us to help this group. We sourced quite a lot of deals for them, by the way. They didn't end up closing on one that was actually a very good deal, a $50 million cancer center, for a variety of reasons that were beyond our control. They were totally their strategic decision, but that's not important. We sourced a ton of deals for them. I mean, we're talking about 21 hospital deals in probably 4 months, something like that, maybe a little bit more than that. But the point is, there weren't a lot of hospitals available for sale in that market. So that was a huge deal, without considering all the tertiary and subsidiary businesses that we also found in the meantime that could have been good add-ons. So from a relationship perspective, that was a huge success. I think the point that I was getting at is the sourcing of these deals led me to a point where a lot of other folks asked us to do the same thing because they realized it was time consuming, difficult, and very, very complex to build an infrastructure to originate deals. And interestingly enough, even sophisticated players didn't have that infrastructure in place. And in most cases, they were relying purely on their referrals, on their connections from their past careers, and so on and so forth. And so when time came for them to find deals on demand, they had no solution because they were basically stuck in a process where they were basically relinquishing the control of their future to somebody else's and relying on them for their next meal because that's ultimately what they were doing. And we saw a lot of folks coming to us asking for that kind of help. And that led us to building the deal origination process that we currently have and testing it out in other markets like the United States, UK, and Europe. And, funny enough, it worked even better in those markets because we built something that was tried and tested into a different environment and different economy that was very challenging. As we deployed that into a market where acquisitions were really something that people were quite familiar with, it was kind of easier, not necessarily easy, to get results. And from that moment on, we started sourcing deals for everybody, really. Search funds, brokers, investment bankers, private equity groups, strategic buyers, family offices, virtually everybody interested in gaining certainty when it comes to sourcing deals, which is the most important aspect, right? Knowing that you're going to have more opportunities coming in independently of the effort you put in, because you have somebody that is looking, and kind of like guarding your corner and taking care of these technical aspects while you focus on what you do best, which is closing these deals and making the money that you should be making. So we source deals in UK, Europe, United States, from 1 million to 50 million in ticket size. And the interesting thing, in my opinion, is that the strategies themselves kind of like perform well across markets and across industries with the right adaptations, of course. And that is because the principles didn't change. And the principles for sourcing deals will probably never change. The technicals might be different depending on the market we want to reach out to and how we want to connect with these folks. But the principles around how we go ahead to find deals off market and deals that are proprietary to us, it's always the same. And once we understand what the core principles are and what our strategy is for finding these deals, then the technicalities and the solutions that we need to implement to make that happen become obvious. And I think sometimes people try to put the cart before the horse because they work on the technical. They want to know what's the magic trick, the pill that is going to solve all their problems, and what's the technical kind of like the button they need to click or the AI tool that they need to use to find more deals. If you don't answer the strategic question first and you don't have an understanding of how the origination process works from the get-go, no technical gimmick is going to help you with that. And some folks are profiting from this because they basically sell you what you want to buy. So the magic trick or the tool that is going to solve all your problems, but these tools don't actually work because they don't have longevity and they're not based upon a strategy that has consistency with your market, with your industry, and with the goal that you're trying to reach. And so what I realized over time was that what we built as we initiated our process was a system that was strategically based on core pillars that could be replicated in all markets and in all industries with the right, declinations and applications. And if that is, how you think about sourcing deals, then you're going to have much easier time finding deals. I talk with people a lot of times that ask me how to get more deals, or how to source more deals, or how to guarantee a certain amount of deals in a certain amount of time. And I think these questions are actually rooted in insecurities and maybe in pressure that they have from the outside, from their peers, from their superiors, or something else, to kind of like perform. Because the reality of it is, you cannot really predict the deal flow that you're going to generate. You can predict, you can have a range and kind of like make very rough guesses around what the result can be if you perform certain actions. But still, even if you do everything perfectly, there are still a few elements that might affect the outcome that you produce. One example, you might be looking at an industry where nobody's looking to sell right now. That might just be the case. And no system, no market, no industry will make things better for you. It's like, if that industry is not interested in selling, there are no sellers available, there's no way for you to make them convinced, unless you make them an offer they can refuse, as my Italian mafia guy would say. But what you can do is create a system that over time nurtures relationships, so that as people get interested in selling, you are the first person they think about. And that's really the way I would like to approach deal origination in general, and how I started approaching deal origination when we first got started. It was like, okay, how many people can reasonably be interested in selling their business today? Out of 1,000, maybe a limited amount. Let's say it's 5 businesses, 10 businesses to be generous, so it's 1%. How many of these business owners, same business owners, are going to be interested in selling their business in a 12-month period, 18-month period, 24-month period? Probably a significant amount, significantly larger than 1%. So you see where I'm heading here. Being short-sighted and just focusing on that 1% that you can get right now is not going to get you the results you need. It's going to frustrate you and create a system that is very inconsistent over time. So you go up, find a few deals, then you spiral down, you don't have anything anymore, you are starving for 6 months, and then you catch momentum back up and you find a few hot deals again. That is not consistent, not sustainable. But if we build an infrastructure that nurtures relationships to keep in touch with these guys as they mature, then as this engine starts to work, you're going to start to see people that get back to you, 2 months, 3 months, 4 months. And they say, well, we initiated a discussion a few months back. We weren't really considering the idea, but now we're open to it, and you're the first person we thought about. And that's how the system starts to click, right? But it isn't something that happens overnight, and you need to be prepared to have an infrastructure in place that gets you to that outcome, and builds that sustainability and consistency over time. So certainly it's not something that you get, with a snap of a finger. It's not something that you can guarantee, but it is something that you can aim at by improving results step by step and building something that is consistent over time. That's what I've learned the first time I started sourcing deals, because again, I needed to accommodate for long timelines, lack of data, and very long education process for these sellers. And so that was the only way for me to get consistency, because it's like, okay, I'm gonna suffer for the first 4 months, but after that I'm gonna get results continuously, because I'm building a funnel of people that I connected with on month 1, they got ready on month 4. Then people ready that I connected with on month 2 connected with me on month 5, 3, 6, 4, 7, and so on and so forth. And after a while, everything keeps refilling the funnel, and you have that consistency and stability that you're really looking for. So that's kind of like the backstory and how everything got started, and how we got from kind of like scattered effort in sourcing deals to a process that is more consistent and stable, and it works across markets. And if you are looking for more deal flow, if you want help just in building your own infrastructure, or want somebody like us to build it for you and run it for you, you can check the link below and book a strategy session with one of my team members and consultants. We can see, first of all, if what you do applies to us, so whether we can take you on for the specific engagement that you have, because those are very complex things. You might not be the right fit for what we do, but provided you are, then we can look at ways to potentially help you source more deals, close multi-million-dollar opportunities, and basically take the all origination process off your shoulders so that you can focus on closing. You can increase the level of certainty that you have when sourcing deals because you have somebody that finds them for you, and yeah, be more successful.